insurance to protect my business. So some of us are business owners. And again, Naomi is going to just quickly talk us through what the possibilities are to get insurance in the UK.
Yeah, so we know that having a business in the UK can be high risk. You know, if you're running a business on your own or with one or two individuals, you really are key to that company and to the development and progress of that company. And so many businesses in the UK are SME businesses, small businesses being run by 1, 2 or 3 individuals. And we know from looking at the risk there that the death of a key individual could literally wipe out that business. So what this type of insurance is looking at is a risk within your limited company of sickness, long-term illness, and life insurance, so covering death. Because when we look at how long businesses could survive if a key person was no longer there, it's said recent studies have shown that over 40% of businesses would fold within a year if they lost a key person. And I think that's true, really. I deal with SME businesses all the time, and you look at, there are definitely key people. Bimpe will be a key person in her business. You know, if she wasn't able to come to work tomorrow, then what would happen next? I'm a key person, you know, if I got sick, what would happen? And so this is really talking about looking at the risk there for you and your family of that and insuring yourself through the business because it's tax efficient. So there's some real tax efficient savings of setting your insurance up through your limited company. So I'm not going to speak through all of these because it's a bit wordy, but it is just trying to show you the different types of insurance which are available through a business. So when you look at a company, there are different strands of risk within that business. Now, if we look at the first one, the relevant life cover, that is the one that's always most popular. The relevant life cover is the most popular type of business protection because it is, in essence, it's a life insurance policy paid for through your company for your family. So your business pays the premiums for the life insurance. The life insurance is wrapped in a tax wrapper for your family so they don't pay tax. And the business pays the premiums with no corporation tax, no income tax, no NI. So it's hugely tax efficient because all the premiums are paid gross. You can take it up to age 75. So you can have a really long term on your life insurance through your business. And it's fully flexible. So you can take it out of your company at any time. If you decide to shut your business down, you can take it with you and take it personally. So a really good option. The second one is looking at income protection. So what income protection means is it's a way of protecting your income. If you're taking an income out of a UK business and you're worried about sickness. So what this would do is it would protect your income against any sort of risk. So any sort of reason that you can't work, you're in an accident, you've been taken sick, if you can't work and that's having an effect on your business, this income protection would pay you, it would replace your income while you're sick and trying to recover. So usually relevant life cover, the first one, the life insurance and the income protection are highly popular for people that are running their own business within the UK. Key person insurance is a way of insuring your key people in your business. So, you know, if you have someone, you've got a business and one of the directors is driving all of the sales, for example, and you know that if that person was to have a heart attack tomorrow, that business would be worth 50% less because that person is driving all of the business. What you would do is you'd insure that risk through the company. So you take out a critical illness plan, so a plan that would pay against heart attack, cancer, stroke, a lump sum, and you'd insure that lump sum through the business. So the company pays the premiums and the company gets the benefits. And that is paid as a tax-free lump sum. So for example, you might say, well, actually, if one of us was to have a heart attack, we would want, for example, £500,000. And that £500,000 would help us run the business. It would help us replace our salaries, etc. And that is what that key person policy would be designed to do. So paid for through the business, benefits come into the company. And then the final one is shareholder protection. So if you've got a business, a limited company, and there's two of you, and you're worried about what would happen to the shares if one of you dies, shareholder protection makes sure that each person has the right amount of life insurance, so that if either of you die, the other person can buy the shares from your family and your family are compensated in your business. So a good example, £1 million business, valued at £1 million, 500,000 each, 2 people. One person dies, the family would want the value of those shares, so the 500,000. So you'd have had an insurance policy to pay out to your family on death. So the 500,000 goes to the family and the business stays with the directors. So again, a really popular type of insurance, because it means that the families get compensated properly. You know, you've agreed what the value of the business is. You're not having to have a conversation when emotions are running high and people are ill or died. So shareholder protection is the final one. And those are the 4 key pillars really within business protection.
Just a quick question on that one.
Yeah.
Is this exclusive to businesses in the UK?
Yes.
This cover. So you have to have a business, you're running a business in the UK for that to qualify for that cover.
Yes. Yeah. You can be living anywhere in the world for key person insurance. Key person insurance is a good one. You can have that, and you don't even have to be based here. Nothing at all. If you've got a UK company and I've covered people all over the world for key person insurance, actually. So that is a really good example. You know, you may not be here at all. You may be here 2 weeks a year, you know. If you've got a limited company here and you're a key person, then we can insure you under that company.
So, for example, if you have a UK property portfolio, for example, and so, you know, as in through a company, so you've got a UK company that owns 2 or 3 properties buy to let, and you're a director and shareholder of that. Could you, because the rental income is derived in the UK, so that's a business.
Yep.
Which a lot of people are doing, but they don't realize they're running a business.
Yeah,
so
no, 100%.
That actually is a business in the UK. You've got the company owns property, your director, you could actually buy this kind of insurance cover and use the rental income as part of, as to pay the premium.
Yeah, that's fine. Yeah, because what you're saying is that person's key to running that portfolio. So they're a key person in that business. They may be organising the rental in the UK market.
Agents, exactly.
And so they're running a legitimate business. You're paying tax as a UK company. You are set up as a UK business, and so you can definitely be a key person within that business.